Hey everyone, I wanted to do a video for you guys on market orders and how I use them for trading penny stocks. Um, I feel like this is a good opportunity because I placed a couple market orders that didn't go through, and I kind of want to show you guys why and why it's good to understand to stick with your strategy and not divert away from it and trade with emotion. Um, so I'm just gonna. This is all for my watch list. I don't own these stocks. I'm trying to buy some right now, but I haven't had a good opportunity yet. So I did a video the other day, highlighting like a step-by-step strategy of what I do to trade stocks, and you guys could check that out. But this is one of the stocks I was looking at. Now I used a market order, which I'll get to in a second, to basically place a buy-in around $2.20, which is right about here. So I wanted to get this low. Now, the market opened up with this stock and it shot up from about 230 to 250 and it never came back down. So my market order never placed. Now I'm going to have to make an adjustment on that and I'll probably put it at this dip right here. We'll say 244, maybe 243. I'm going to place a new one and I'll show you guys how I do that. But what I've noticed, like my friends and other people sometimes do, or I still see people online, they kind of make the mistake of, they miss their opportunity to buy the market order because the stock went up, so they buy it at a higher price when it went up, and then they never really made money because the stock shot up, and as soon as it shot up, they bought it thinking it was going to go higher, and then it came back down, or maybe just kind of went flat like this and didn't really do anything. So if I would have done that, like for instance, if it shot up and I'm like, oh my god, I missed my opportunity, so I'm gonna buy in at 252, this first point right here, and then the market will drop down. I'll probably be losing my mind because I already lost money right away, and then it'll start coming back up, but it doesn't really do anything. It just goes up a couple pennies and that's it, and then it actually ends the day lower. So it was a good idea that I didn't do with it or do that. I stuck with my strategy. Now, same thing with RXII. I had a price buy-in at about 70 cents. I was looking for somewhere like around here, 70, 71, and it kind of just stayed flat at about 73, 72, and it never really made that price point happen. So again, I could have bought it when it went up or when it maintained, thinking, oh, it's gonna go higher, it's gonna go higher, and then like, look, nothing happened. So I didn't get emotional. I didn't feel like I lost out and I was trying to force a trade. I notice a lot of people try to like force a trade. They want to trade that day. They want to make money. They're being too aggressive. And you guys just need to remember to stick with your strategy. You pick certain price points when you enter a stock for a reason. It's because you don't want to pay more for that. It's like going to a department store and seeing a pair of shoes on sale. Like, obviously if it's on sale, it's a cheaper deal, you want to buy it. But if it's marked up, you want that same pair of shoes. The question is, are you willing to overpay for that pair of shoes, or are you willing to wait for it to go on sale? Maybe right now it's in season, it's like a pair of snow boots and it's the winter. So obviously they're going to be marked up because everyone's buying snow boots right now. So you're going to be overpaying for that stock instead of waiting till like maybe spring or summertime when nobody's going to be buying snow boots and the prices are going to be severely dropped, and that's when you want to buy it. So it's just kind of the mentality. You got to think long term of how you're going to do this. If you just buy every time the stock market opens, you just buy something, you're gonna lose money. Your strategy is not solid. Now, so what I'm gonna do, go ahead with this NAK right here, and here's my limit buy. So I'm just gonna delete this or cancel it, and I'm gonna create a new one, and I'm gonna show you guys how to do it. So we're in an NAK. That's the ticker. It's at 255. So I'm gonna go to buy. Now, right here, if I just input the number of shares at the 255 price, the next day that the market's open, it's just going to buy in right away whatever the stock's at. And one thing you guys notice, a lot of volatility and a lot of trading happens very early in the morning. So that you'll see stocks spike down or spike up right away because people from the night before have all their trades ready to go and they're trying to buy in. So they want to get that early morning volatility, which, like I said before, you want a lot of volume and volatility when you're trading stocks. I know that scares people talking about penny stocks, but that's how penny stocks works. That's how you make money, is off of that volume and volatility. But I'm not going to do that. I'm gonna make a order type. And you have these 4 order types. You have market, which basically means, just like I said, you're paying the market price, whatever it is right now. Then you have the limit price, which is the price that is the maximum or minimum that you're going to pay, nothing more, nothing less. And then stop loss and stop limit. And basically, for the stop loss, if the price gets above a certain point, you want to buy it in before it goes too high. And then stop limit is you're only going to pay that exact price, that exact limit price, as the price goes up, because you don't want to miss that rally of it going up too high. Now, some reasons why people don't like limit orders is because it will only buy stocks at that specific price. And if there's a sharp spike down or a sharp spike up, it might jump right past that price and buy in at a different price that you didn't want it, or not complete the purchase order at all, and you'll just miss that entire day. So I typically use just the limit or the stop loss depending on which way I'm trying to go on the stock. So let's look at the NAK chart real quick. I'm going to use a 1 week chart. I like to, since I trade day to day, I try to see where it's been in that week. Now, ideally, I'd want to make my lowest buy-in right here, because this is all January 17, and this is 13, right? The last day. So the last day, some traders will look to the last day and how traded it lows, how low it went, and it's down here way at 207. I don't think it's going to go down 207. If you look at this 1 year chart, I mean, this thing's ran up 1,000%. I don't think it's gonna keep falling down. But I'm going to put my buy-in right now. It ended at 255. I'm gonna put it at this first dip right here. I'm gonna think that this is a price point where it's gonna be a support line. Where if it hits it again and it comes down to I'll put 245 just to make it even. If it comes down to 245, it'll bounce off it and then keep going up. It'll check that line. Now, if it breaks down past that line, I'm going to set up a stop loss order at about at this peak right here, because I'm going to think this is the next support line. So it's 232. I'm probably going to call it 235. So if it breaks down below this point here, and instead of bouncing back up and it starts going down, then I'm gonna set my stop loss for going down at about 235. And the reason why is I'm going to cut my losses on the stock. I'm just going to call it a wash, I'm going to call it a loss. I'm not going to let it go down all the way to 220, 210, I'm not going to let it lose all that money on that stock. I'm only going to lose a little bit. And a lot of people will call it like a 1:10 or a 1-to-2 ratio, where they pick a price point 5 cents below to buy in and 10 cents above current price to sell it. So if you lose and it goes down, you only lose 5 cents. But if it goes up and you sell, you make 10 cents, basically like a 1-to-2 or 1/2 ratio. I'm just gonna do even 245 just because that drop point I showed you guys. I'm just gonna keep it simple. So I'm gonna go to buy, and I'm gonna go to limit. So you see right here, it says specify the maximum amount you are willing to pay per share. So the maximum I'm willing to pay is $2.45, 10 cents below. Now again, like I said, this order that was at 220, I believe, earlier for all day today, it never went down. So I didn't trade, but I didn't force a trade. I didn't just buy in because I got nervous or I was scared I was going to miss out. But I'm going to do it this time. I'm going to change it again. This happens sometimes. I don't always make money. Sometimes, my stocks don't play, and that's fine. But I keep adjusting. So the next time the next screen you're going to get, the time and force, your order will be queued for market open. Choose the time that your order will expire. I always put never expires because I don't know if this is going to expire today, tomorrow, whatever. So I just put never expire. And then I'm just going to put the same 100 shares as before. So my limit price is $2.45. Now you saw it's at 255 right now. So it still needs to drop 10 cents before I buy in. Okay, I just want to make that clear. it has to drop 10 cents before my buy order happens. So it has to get to right about here, right about this little dip point right here. So if it hits that and it goes up and it goes back to this line at 255, I can tell you right now I'm going to sell it because that's a 10-cent gain per share. You saw my order is 100 shares, so that's 10 cents times 100, you know? If it goes up that more, I mean, I might feel a little bad that I missed that rally, but either way I gained. You know, I made money, and that's ultimately what this is about. Because you're just, with Robinhood, you're not paying fees, so it's not like you're using Trade King or E-Trade or whatever, where if you buy and sell a stock, you lose a fee each time you buy, each time you sell. 100% of the money is mine, so I can make small gains, these single gains over a time, and they add up. And you guys like see my chart, like I can make consistent gains. I just have to be smart, you know. I can't get emotional. I just have to be consistent. So I just wanted to show you guys that how I use market orders to trade penny stocks. You know, I'm not a day trader where I sit in front of the screen all day. You know, like I have my day job, so I just set these up this way on the side, so while I'm out working doing my job, you know, my Robinhood app's taking care of everything for me. You know, it's done it passively. So it's a really good way for you guys to kind of learn and do it yourselves, and you guys can make money passively as well. So I was just trying to share that with you guys. If you guys like this, click like and subscribe on my channel. Help me out. Leave a comment if you have any questions. If you have any ideas you want to share, let me know, and I'll do my best to keep these videos coming for you guys. So all right, have a good day.